Did you know that mortgage rates are negotiable? Only 39% negotiated the interest rates. Hey, this is Stephen Saunders, the Giveback Realtor, covering real estate market news. I'm with Avenue Realty, and today we're going to look into the articles coming out of National Association of Realtors. And we're going to also talk a little bit about the outcome of a meeting at City Hall in Sisters, Oregon. All right, so before we continue on with our conversation, I just want to tell you a little bit about the Community Giveback program. And I just want to talk to you briefly about what it is. So at the end of every transaction, I give back between 5 and 50% of my net income to the community. 20% of that is client directed, which is awesome. Look at these two recent closings. We ended up writing a check to the NROTC and to the Bright Side Animal Center in Redmond. Those were client-directed contributions to these community charities. The remaining 80% of charitable funds are directed by you, my clients, the community, local artists, educators, charity volunteers, all of the stakeholders in our community have the opportunity to vote on where funds should go. So this is what's meant by the Community Giveback program. It's what's represented when you see this brand, the Giveback Realtor, a project that I care deeply about and hope that you will be part of. And with that, let's get back to the interview. But before we start, please like and subscribe to the channel because it gets the word out. All right, let's discuss some important real estate market updates and tips based on findings from the National Association of Realtors, published in the fall edition of Realtor Magazine, which you can get online. So we're going to talk a little bit about these mortgage rates. Did you know that mortgage rates are negotiable? So in a study of 2,000 people, nearly two-thirds, 63% of buyers, negotiated their home prices, but only 39% negotiated the interest rates. The report noted that negotiating even a quarter point can save thousands over the life of the loan. Now, the illustration presented was based on $350,000, 6.5% for 30-year fixed. Now, if you negotiated a quarter percent, that would be $684 a year. Now, just note, in this market, lenders would likely take it because lenders need to lend. So the point is, be sure that you get multiple quotes for multiple lenders. And honestly, what's the worst that could happen, right? They say no. So there's really only an upside for you, and it's another avenue to save money when buying a home. Currently, you can also be asking for seller concessions and lower prices in these environments. Let's take a look at housing inventory. So new existing home supplies diverge. This is an article by Lawrence Yun. He is the chief economist for the National Association of Realtors. And I found this article to be really interesting. It covers the inventory dynamics in this higher rate environment. It is new home construction that is actually helping to increase inventory, while the existing home sales remain, constrained by low listings. And that's in part due to the high interest rates. People just don't want to move. So only 10 to 15% annual growth is expected for existing homes until those homeowners feel more comfortable moving with their low mortgage rates. Just recall that 90% of homeowners today have mortgages that are less than 5%. So these current rates do seem a little high for them. But the reality is that life changes are pushing some to sell, right? There are literally millions of marriages, divorces, births, deaths, and of course the newly minted retirees that are looking to downsize. So I'm going to take a quick minute and read through this article. It is a pretty good one. I'll read just the first paragraph, and then you can see here the link on the top, which I'll have in the description. Newly built homes account for a small share of the home sales market, generally around 10%. But builders have grown that percentage this year and will continue to make further gains in 2024. Even with higher mortgage rates, new home sales are rising because builders are bringing more inventory into the market than they did before the COVID-19 pandemic. By contrast, the market for existing homes is gummed up by lack of inventory, which is about half of what it was in 2019. After 2 consecutive years of nearly 20% declines, existing home sales will recover next year with a baseline gain of 10 to 15%. Now, if somehow more inventory bursts forth, its surprisingly positive gain of 25 to 30% is a distinct possibility. Lack of supply is behind ongoing multiple offer scenarios on moderate to mid-priced homes. So this is kind of what we're getting at with, it's just a thin market. There's just not a lot of people. And here he cites how the rates, may be too good for people to move out on. So this is a really good article. If you have any interest in checking it out, please follow the link. Again, this is public. It's published by the National Association of Realtors, and it's a great resource. Okay, so let's take a look at, I just want to talk to you briefly about foreign investment. So as many of you know, people around the country buy and hold real estate as an investment, especially in economies where they don't have access to the capital markets. So China topped the list of foreign investors in U.S. real estate. They make up 13% of purchases. Now, other top countries include Mexico, I think it's 11%, Canada, 10%, India, 7%, and Colombia, which is where my family's from, has 3%. Now, this may not be a huge topic in our market up in Central Oregon, but note that my team can help navigate the requirements for transactions with international buyers and sellers. There's certain documentation and disclosures that need to occur. So if you are, needing any help with that, please feel free to reach out. Now, I want to talk a little bit about sustainable upgrades, because this is an important topic, right? If you're looking to buy here in Central Oregon, we now have the energy score that is providing some transparency to market participants about what they can get from their home options. If you are selling, well, it might be time to consider things that you can do to upgrade your home and make it a little bit more appealing to the market. Now, there's everything from smaller project level stuff. This article here is really good. Go ahead and show that. It's called Sustainable Updates by Budget. And we're going to talk a little bit about here this infographic. So under $500, you can replace bulbs. You can upgrade to a smart thermostat like a Nest. That won't run you very much, and it could increase your energy score, especially if you're at the lower end in an older home. If you are looking to go to the $1,000 to $5,000 range, well, you may be able to install an electric vehicle charger. That is a big deal in Central Oregon. There are more and more electric vehicles on the road, and if you are selling and have that, it could be a small touch that could have high impact. And there may be tax credits that you could qualify for. So that costs a little over $2,000 on average to install that, but it's a high visibility feature that many buyers may care about. Replacing windows could be another option. That could cost you, between $1,500 and $2,000 for 5 to 8 windows. And it could save you, up to $600 with a 30% tax credit. Some other categories are heat pumps, solar panels, new insulation. Now, these can range from anywhere from $5,000 to $17,000, but they can save, up to $400 to $500 a year. So it's pretty cool to think about that. If you were willing to set aside, if you were willing to set aside between $20,000 and $25,000 for renovations, you could make a substantial set of changes that would appeal to a buyer. This infographic here has it that with $20,000 to $25,000 investment, you could be saving $2,500 a month. You could be saving $2,500 per year. That's a roughly 10% return, which means you pay the entire investment back over 10 years. That's a pretty significant chunk of change. So if you're interested in reading more, consider this. If you need help going to market, considering how you could finance these renovations, there are several options. Everything from plunking cash down up front to using your HELOC to other creative solutions that realtors like me can bring with investing partners. So if you are looking to go to market and know that you need to make some edits to your home to appeal to the market, I might be the person to talk to. And last, I want to talk about the staging. Staging has been a big topic. Now, this article here is called A Profile of Home Staging. This was a study done by the National Association of Realtors, and it really covers this generally underappreciated topic, right? According to 2023 Profile of Home Staging, staging your home can increase your value in a transaction by 1 to 10%, according to industry research. So what that means is that even a modest investment in staging makes a home more attractive and sellable in a competitive market. Now, in this market, as a seller, with the financial markets the way they are, it's a little bit more of a buyer's market. So it is in your interest to consider doing this. And it really is leaving money on the table if you don't do it in many cases. You can think about it this way. So if you had $1 million home, staging would cost somewhere between $4,000 to $6,000. Now, if you get a 1% increase in the sale price, and that's on the low end, well, that would be roughly $10,000. Now, at the midpoint of that price, at $5,000, that's a 2x return for making the home look nice, for helping people visualize what the home could offer them. Now, if you manage to get a 10% increase in sales, which is not uncommon, on $1 million home, that would be $100,000. Now, that's a whopping 20x return on that $5,000 investment. So in my practice, this is pretty much the best practice. Now, I will note that this does not include the carrying costs of a vacant home, the taxes, mortgage, all of that while you're out of the home, because some people do sell while living there. But ideally, that's not the way to do it. This really can get you quite a bit more out of the home, and I personally think it's a no-brainer. And at some service levels, I do include this as part of my real estate service. So if you are thinking about selling, please consider reaching out to me, and I can give you some pointers. Okay, on to the Sisters City Hall real estate meeting with Scott Woodford. He is our community development director, and he discussed some topics on land use and development topics that Sister is facing. So let's start with an overview of the building permit trends. I have the printout here, which I'm going to just kind of this is based on the notes that I'm sharing here are all based on what we have in this multi-page report. Here are the highlights. The permit numbers have declined significantly over the last few months compared to last year. Now, this is likely due to rising interest rates slowing the housing market. It also means that there's fewer land use applications coming in. This may be a problem down the line as housing needs continue to grow. And if we don't have permits, we're not going to have building. It's going to put more pressure. It's going to push us back into a seller's market. So next, I want to discuss one of the biggest issues, and that is the potential expansion of the urban growth boundary. So the state population predictions show that Sisters will need between 206 and 256 additional acres of land to accommodate growth over the next 20 years. On November 8th, that is in 2 days, the City Council will decide whether to begin the process of designating new lands outside the current boundary. So if you are a landholder or are interested in potentially developing land, please come talk to me. We have partners, contractors that can help you make the most of these needs for our community and to benefit yourself from that. We're also working to promote more affordable housing options within our existing boundaries. So last year, code amendments allowed for more compact housing types like duplexes and cottage clusters, condominiums, the like. Yes, there's a lot of contention around having these higher density requirements, but there really isn't a lot of land for sisters to grow into, and it's forcing the city to consider how we best use the land that is available, especially those lots that are undeveloped or underdeveloped. So there's efforts to develop a workforce housing, and this could be, this could incentivize builders to, create housing that has these higher densities. Okay, protecting our community from wildfires is another big priority. This is huge. It was a big topic of discussion at the meeting. We're updating our defensible space standards, and we may require more fire-resistant building materials for new construction. This change is something that would take years to roll out. Although homeowners, you should check the video, because I did an interview with an insurance broker that is highlighting the market pressures to really handle this problem. Homes on the market today at times have been uninsurable because of how Sisters is being classified due to its proximity to the forest. So this could be a really interesting topic, and one that we'll need to keep an eye on. And finally, the council has asked us to reevaluate our short-term rental regulations, given concerns about the impact on long-term housing availability. So we all know that Sisters is a beautiful place, and what does that mean? It's incentivizing people to have and hold investment property here that is servicing the events that we have going on throughout the year, as well as peak tourist season where people are accessing the nature, trails, all of that. So currently the limits are that you can have short-term rentals within, or they can't be within 250 feet of each other. Outside of the downtown, kind of what's called the economic zone, they are looking to change this to potentially 500 feet, and there will be public outreach and meetings about this coming soon. Okay, well, that is it. I hope this was really helpful to you. I am Stephen, the Giveback Realtor. Let me know if you have any questions about this, or any questions about your home specifically, if you need evaluation or anything like that. I'm your guy. Okay, and I will see you next time. Have a wonderful, wonderful day. And please forward this to somebody you care about. Talk to you later.